Hi, Karen Deis here, and this is the Mortgage Currency March 2015 Rule and Regulation Updates. Now, if you're an FHA lender, I'm sure that you're aware that as of June 15th, for all case numbers issued on or after that date, you're going to be underwriting loans with a new set of underwriting rules. Now, here's the problem. With the new handbook, there is no, and I absolutely mean no way to know which rules have changed, what are the old rule and what is the new rule. So one of our advisory board members is writing a three-part series, and in this issue you're going to find part 2 where she dissected 33 rule changes where the credit review process and the income review process has changed. It was a huge undertaking. In fact, it took her over 12 hours to create a comparison chart for subscribers with the old rule and the new rule so you know what has changed. So for example, there was no rule in regards to how to figure hourly income if the hours varied. So they could vary day to day, week to week, month to month. The new rule says that you must now have, if its hours varied, a 24-month average history, and that's how you're going to figure income. However, if they get a raise within that time period, you only have to figure a 12-month history if the hours vary. Well, like I said, there's 33 of them, and just covering the credit and the income issues. So use this chart to review with everyone, your staff, send it over to the compliance department, and it may be something you want to use in a real estate meeting as well. So stay tuned also next month for part 3, where we also put together a comparison chart for you in regards to credit, income, and appraisals. So next, I would love to mention that the NMLS has created a rule of conduct for students. Evidently, there's been some instances where someone took the exam for somebody else or assisted them in passing their CE classes. So now before each class, each webinar, each online training session, the student must now sign or acknowledge 9 specific statements. Like you're the person that you say you are, and you promise that you're not going to assist in anybody in passing the class. The bottom line is you could forget to fill out the acknowledgement, especially online, and it'll allow you to take the class. But guess what? You won't get credit for that class unless that acknowledgement is signed first. Now, this article also provides you with the 9 specific statements that you'll need to attest to before every class from here on in. Now, it seems like August 1st is way far in the future, but it's a little more than 4.5 months away, and you know that your disclosure world is going to change. So here's what we did. We're dissecting each section of the disclosure rules, and in this issue, you're going to find part 3 of a 6-part series on the topic of tolerances, the percentages, and when you have to redisclose, and there's a few examples of tolerances that have not been met and what you have to do. And if you haven't had a chance yet to read part 1 and 2, they cover timeline examples and a tutorial on how to read the CFPB rules, because that's a major factor in itself of you understanding it. Recently, both Fannie and Freddie have been publishing a series of frequently asked questions, and they are usually released a few months after a rule update or a major underwriting change to clarify some of their vague wording. Now, don't get me wrong, I think this is really a great idea, but why don't they just make it clear up front instead of having to wait a few months to figure out what it really means? In this issue, here are some of the FAQs that we've written about. The Fannie and the collateral underwriting and how they plan to treat the appraisal values when it's run through CU. Fannie borrower income policies. Another FAQ covers the 4506T form. And Fannie has republished the HARP FAQ. Remember, that's being discontinued supposedly December 31st of this year, but the old FAQ had not been updated since 2011. Now for Freddie, instead of calling them an FAQ, they call them a fact sheet, and subscribers will find two of them. One covering condo project eligibility, and the other fact sheet covers red flags that loan officers and processors need to be looking out for possible fraud. Now that's going to be a good one to review with your staff and compliance department. Now one more thing. Subscribers will find the new 2014 video on how to read tax returns and close more loans. The tax forms change from year to year, and you usually have to provide a 2-year history. So on the website, you'll find 2013, 2014 classes. If you are not a subscriber, you can either purchase the CD for both years, or you can buy the classes individually online for a one-time view. And in all the instances, you can download all of the tax forms with notations on them where you count income, where you don't. And just a reminder that you'll need to start using the new cash flow analysis form provided by Fannie and Freddie for self-employed borrowers starting this month. So thank you so much for subscribing, and remember that getting a loan approved and closed these days is rocket science.